What's happening, beautiful people? Good morning, America. Good afternoon, Europe, and welcome everyone to our new live stream. We have a big day today in the economic calendar with the crude oil inventories just an hour away and the Fed interest rate decision keeping traders on the edge for market direction. Also today, the US president is meeting Vladimir Putin in Geneva, but the expectations remain low for any conclusions as lately both leaders made very acid comments about one another. The good news is that they will have 90 minutes to talk away from the press and the other staff members. So the outcome of that meeting could be beneficial for both nations. More on this topic in just 30 seconds with my guest for today, Mr. Brad Alexander, CEO at FX Large. Right, ladies, gentlemen, traders, without further ado, please welcome Brad Alexander at FX Large. How are you, Brad? Good afternoon.
I'm good. Thanks for having me again, Andrew. Always nice to see you. How are you these days?
Always a pleasure to have you here, Brad. And I'm good. Thanks for asking. Very good, very positive. But there are so many things happening on the markets today. I don't know where to start. We didn't see a lot of movement on the markets as traders are still waiting for a series of announcements and, of course, the Fed interest rate decision and the FOMC Economic Projections. Jerome Powell mentioned many, many times that the central bank would maintain its ultra-easy monetary policy in place until the economic recovery is fully reached. However, with U.S. inflation rising faster than expected and the economy forecast to grow at its quickest pace in decades this year, questions have been started being asked over the Fed should continue and would continue to keep the interest rates as low as they are now. Does the Fed have enough reason to raise the interest rates sooner than 2023, 2024, Brad?
Well, getting back to what you were saying about the FOMC, Jerome Powell has always said, I'm a data-driven guy. He will not do anything until the data shows him that it's time to go. And we're going to find out this afternoon how much power his sub-presidents have, like Fred Kaplan and people like that. Sorry, Robert Kaplan, because they're talking in different languages. So it's going to be interesting to see what the consensus is. And of course, the famous dot plot. And I think some of the presidents are going to be bringing, as you said, bringing the dates a bit further forward. Whether Jerome Kaplan himself wants to do that is a good question. Yeah, you were saying as well about the markets, people waiting. I had some frustrated students on Monday saying, I can't find any opportunities. Well, it's because simply that the market's sort of on hold, waiting for this afternoon. I mean, there were opportunities there, but it's a bit tricky these days, as you know. The thing about inflation, and this is a bit funny to me because, as you know, there are different kinds of inflation. You've got wage inflation, which we're clearly, with the good inflation, it's like good cholesterol and bad cholesterol. The good inflation is wage inflation. If wages go up, therefore prices go up, and it's a good thing because the economy is proving that it's functioning. You've also got currency inflation, which you live in. We both live in European Union countries. We know what that means. We've actually had to change suppliers of British products because the pound is getting so strong against the euro. The shops are actually increasing the prices. So it's just a bit frustrating. But here you've also got supply inflations. And the irony is the American economy is doing so well right now. People are getting out and trying to buy things and whatnot. But the rest of the world is still, as we've talked about many, many times, struggling to get caught up with their vaccine programs and so forth.
Exactly.
So the supply issues are a big problem, which is driving a bit of inflation in the United States. So when they say it's transitory, I tend to agree. I think the inflation is transitory in that once the supply issues get sorted out and currency stabilize a little bit, the inflation is not going to go away completely, but it's going to be diminished. So I agree with Powell in that sense. So in that sense, I would say no, not raise the interest rates. If this inflation turns out to be a long-term thing, who knows, a fourth wave, a fifth wave, then yeah, that could be hopefully not. That could be an issue. So it's not much of an answer for you, but we're going to find out which of the FOMC members think that interest rates should come back, towards 2023, et cetera. So the dot plot will tell us.
How many members are in the dot plot again? Because I forgot, 23 or somewhere there in the 20s, I think. Because if I remember correctly from reading the article, 7 or 8 out of 23 or 50 members or something, is somewhere there, voted for. But the vast majority still don't think they have enough reason to raise the interest rates.
Yeah, exactly. And I mentioned a couple of examples, and not all of them do. And we're going to find out. Yes, not all the FOMC members have voting rights. You're right. So we shall see.
So what is happening with the US dollar usually when the interest rates get raised, Brad?
Well, like any economy, if interest rates go up, then the currency becomes more valuable. Therefore, the US dollar increases. And we've all seen it on the charts. Even if the interest rate today at 0.25% doesn't get raised or lowered, which it probably won't, you're going to see some volatility and widening spreads. So, and again, the consequence of raising an interest rate is, not just increasing of the dollar, it has a knock-on effect of making exports less attractive.
Exactly.
And it also increases the cost of borrowing for corporate America. So, it's good and it's bad. Obviously, you can't have a dollar and interest rates that are so low that the banks can't make any money, which is happening in many parts of the world. So you know as well as I do, and most traders know this, that the job of a central bank, especially the FOMC, is a juggling act. They need to keep all these balls in the air, and the biggest ball in the air is the interest rate. So again, it affects everything, of course.
So let's have a quick look at the US dollar index on a monthly chart. We can see it flirting very bad with a 200 moving average right now, trading at the 90.45. Where are we going to see it going if the interest rates will get raised? 102, is that plausible?
Well, the way this is going to work, and with these FOMC meetings, they're going to be hinting at tapering. They're going to be hinting at raising interest rates, so it will creep up over the next year or two. So going back to on the dollar index, there, going back to, I wouldn't say go back to par, going back to 99, 100, well, that is par, is quite plausible. I mean, we've noticed, if you look at your you've got a green candle there this month. We've noticed in our trading U.S. dollar strength, very short term, but we've done well with it. I mean, very quickly after last week's non-farm payrolls, week before non-farm payrolls, we actually, I'm always going on about counter trend trades after the news, and it was a perfect storm with pairs like Kiwi dollar, Aussie dollar, and dollar yen, and we all did very well when price drove. I think I was telling you earlier, I was telling my students, we did a live trading on the non-farm payrolls, and we were saying, no, don't get in, wait until it hits that trend line. And finally, Monday night, over the weekend, and Monday night, price hit the trend line. We went short on Kiwi dollar, Aussie dollar, and long on dollar yen, and it worked out really well. In fact, I think I have a couple of students who are still in the Kiwi dollar trade. So
yeah, I'm still in as well, but not on the Kiwi dollar. I was on the euro.
Yeah, in fact, it was a similar story. Yeah, with an upper trend line, and again, that shows a bit, perhaps temporarily of U.S. dollar strength. So we'll see if that continues. I mean, even today there was a technical opportunity on Kiwi dollar. So to say that we're all waiting for the FOMC, it has slowed things down. So yeah, to get back to your question, of course, I see the U.S. dollar index going up if they're looking at scaling back their bond purchases. Obviously, any hints on an increase in interest rate, and they already have a flourishing economy. Again, it's going to come down to inflation.
Right. Now, looking at the US dollar index, so if the US dollar keeps strengthening, we can say goodbye to $2,000 for gold this year, right?
I would say so. I mean, technically, we're having lower highs on gold. We tried to break. Actually, can you zoom in on that? Can you look at the daily chart just for a second?
Daily, yes, there we go.
Yeah. Okay. It did again. Tried to break support. Didn't quite get there. We are in 1859. We're at now.
Yeah.
I've told my people, wait till we break support, or maybe it'll retrace to an upper trend line. But we are looking at a short on gold. We're not in there yet, but that's what we're looking at. So, and I agree, obviously, just by the fact that we're correlating gold versus the American dollar. If the American dollar gets stronger, then the price of gold relatively will come down.
So no chance for 2000 in gold.
Well, unless someone declares war somewhere, or there's a tsunami or an earthquake in Japan, or the story on gold. All we need to do is have some country declare war on some other country, and gold's back up again. But of course, we can't predict these things.
Based on that, hold your breath for a second. Today, let's talk about wars. If you want to talk about a potential war, let's talk about wars. Today is a historic day as Joe Biden meets Vladimir Putin in Geneva, and they will spend 90 minutes together away in a room from the press and the members of the staff. Now, this is a very tough one. What do you think they're going to talk about? What would you ask Vladimir Putin if you get to spend 90 minutes with him in private?
Well, I mean, very, very quickly, on a topic where we could go for hours and hours, the previous administration spent their time antagonizing most world leaders except for Putin. I think Putin is coming to the realization now that those days are over. He's got, I wouldn't say he's got a tough opponent in front of him, but he's got someone who's realistic. Who knows what hold Putin had over Trump. But getting back to your question, I think it's Biden. Biden's intelligent enough and experienced enough, and he worked as vice president, traveling around the world, to not antagonize Vladimir Putin. I think what he has to do is word it in such a way in that we need your cooperation. We're getting tired of these, people hacking our elections and emails and sabotaging our pipeline companies and so forth, with cyber attacks. He shouldn't come to the point of accusing Vladimir Putin of being a killer again or being a hacker again. that would be fatal. I mean, because Vladimir Putin is the king of denial. He'll just say nothing to do with us. In fact, there was an interview on Bloomberg today. They were just rehashing stuff, saying any problems that the Americans have with us is their problem. It's not our problem. Even though the entire European Union are saying we have a problem with Russia, he's just saying, well, it's not our problem, it's your problem. Well, that's what he's going to do. He's going to continue with that. So I'll just wrap this up very quickly. I think the tactic needs to be look, clearly within Russia, there are rogue groups, whether it's true or not, whether they're state-sponsored or not, it doesn't matter. There are rogue groups who are doing damage to our democracy and our companies and this. We please count on your support to fix this. And in turn, we can I think that's the way it needs to be played. It sounds wimpy, but it's politics. It's diplomacy. Going in with all guns blazing, saying you're a killer, you're a hacker, you're this. It's not going to work. It's just not going to work with someone like Putin or anyone.
As much as some people would like to avoid this, there were some serious tensions between Russia and the US, from Russia's involvement in ransomware, in as you mentioned, getting involved in the elections, to getting involved in Belarus, Ukraine, and the ultimate situation with Alexei Navalny. Now, they were both very acid this year to one another. I mean, as you mentioned a minute ago, Joe Biden called Putin a killer in a TV show. Putin played it very diplomatic, but still, you can tell by his smile that he's not comfortable. Can you imagine what would happen if those two will disagree on something today when they're alone in that room? Are we going to be on the edge of the World War III?
I doubt it. I think in many cases, I use the word civilized nations, when things like that get out of control or are going down to a dead end, they typically kick it down to their underlings, the Secretary of State and so forth. So trade envoys and things like that. So let's see. Obviously we hope that doesn't happen. I mean, I have to say, I did see yesterday where Biden was on the verge of losing his cool. He was asked about aluminum tariffs on the European and why is this was put in by the Trump administration, and why is this still in place? And Biden's response was, I've only been here 120 days, give us a break. That would surprise me. That really wasn't very presidential. clearly he's tired. He's tired of hearing the same questions. I would have answered it differently, saying, look, we've got our priorities. This is on the list. We'll get to it. But he didn't. He actually he was on the verge of losing his cool. So let's hope he's learned from that. He's been advised by that, and nothing's going to happen dramatic with the meetings with Putin and the translators.
So now we need another U.S. president to be advised on how to behave in public.
Yeah, well, that's it. I mean, again, Joe Biden, he spent 8 years as vice president, either doing it himself or watching his boss do it, and taking advice as a good people do. So hopefully that won't be the case. So.
Vladimir Putin and Joe Biden have a history together. They know each other for years.
Yeah.
Do you think it's more beneficial for both parties that they know each other for years than the previous relationship with Donald Trump? Because he was very cold, he was cutting it short with Putin and the rest of the world.
Yeah, I think it definitely helps. It's the old phrase, the devil you know versus the devil you don't. Because it just saves a lot of time. I mean, Putin is not going to just walk in and shake hands and start or bump elbows as we do in these days, and start negotiating. He is going to spend a lot of time sussing out his opponent. And so will Biden. So hopefully that will be diminished somewhat because they've known each other for some time. Whether that's good, bad, or indifferent, I don't know. I think it's a good thing because then they know what to expect.
Well, I can only say one thing: God help us all.
Yeah.
Right. Let's leave the rich with the rich and the powerful with the powerful, and talk about the crude oil inventories, because they're going to be announced in exactly 1 hour from now. Crude oil almost reached 73 per barrel today, and we're only in the first quarter. Goldman Sachs put a bullish note earlier this month talking about $80 a barrel, and we're almost there already. And this is just because OPEC Plus is holding back the output and trying to stabilize the markets. But recently we saw Iran trying to join the round table. And as much as world economies are recovering, we're still not there yet. We still don't know if we're going to be there yet this year. Where do you see crude oil going in the second quarter of the year, Brad?
You alluded to it. I'm going to go back to one word: Iran. In fact, as we've been talking, Andrew, the price has come down. It's now 71.70, 71.80.
703, 04 on investing.com.
I've got so I'm on spot WTI.
Right. Okay.
So you're probably on the, yeah. So it's anyway. Regardless, it's dropped in the last hour. It went from 72.01 down to 71.8. So it has dropped. I mean, I put out a buy the dip advice on my video yesterday, and I was correct, because as you say, it did go up to the spot price to 72.50 almost. Yeah, I think. Well, here's the irony: is that, I mean, as you said, last week's inventory was a surprise. It was forecast at minus 2.1 million, and it was actually minus 5 million. So the supply is way down. And here's the irony: I mean, back in March, we were all panicking because of, it was March of last year. Of negative crude. Yeah. Here we are flying back. You did say that Goldman Sachs had predicted 80. I heard analysts on a hedge fund on Bloomberg a few months ago saying 90. I was saying 70. I don't think it's going to go to 90. Clearly, my idea on 70 has been passed. So I don't think that Goldman's is out of line. If the Iran deal doesn't come back online and we're not getting any more supply from Iran, it's entirely possible that it could hit 80. Because as we know, as we've been talking about, the demand is coming back because people are now traveling a lot more. Production's coming back and so forth. So I don't see 80 as being unrealistic.
So is the supply. And if OPEC Plus opens the tap and Iran joins the round table again, won't the markets be oversupplied, Brad? And remember, we are not recovered 100%. We have not recovered.
No, you're absolutely right. But then don't forget, how long ago was the price of oil $100 a barrel? So obviously we're living in a different world now. We're all trying to go greener. So maybe $100 oil is totally off the table in the next 3 to 5 years. Maybe 80 is the cap. That it's like anything. You need to find a happy place where the oil companies and the consumers can live. You don't want to be paying galactic amounts of money for a plane ticket or to fill up your car with petrol. But the oil companies need to have some margin because they need to answer to their shareholders. That's just life. $50 a barrel
is affordable.
Was right. Well, for us it is. Yeah, if you're putting petrol in your car, but not every oil company, especially Canadian, if you're dragging oil out of the tar sands, you can't survive at $50. So getting it up to 72 is healthier for the oil companies. So it will happy medium. And of course the OPEC, the Saudis, they like to see it at least at 65, and they got their wish now.
Yes. I think for this to work, we need 100% economic recovery worldwide, not only in the States, some European countries, for the demand to stay high. Otherwise, we're going to see a flood of the markets driving prices lower if the demand remains low. Question, talking about oil. How much time do we have left before the oil runs out, Brad?
I honestly don't know. In fact, there's some news just popped up recently because we've been talking about even from last year, part of the Democratic agenda was to stop leases on public land for fracking and drilling. Well, literally, I think minutes ago, an American court overruled that. So if that carries on, sorry?
20 years, 30 years.
Yeah, I mean, if that kind of thing carries on, we could have a lot more oil if they suddenly decide to start drilling in places they didn't want to drill. And again, if it's like anything, if the demand drops, then we'll need less oil. I honestly don't know whether we've got 20 years or 30 years of oil left over. Obviously, we discussed about our good friend Mr. Musk making lots of new solar powers and great batteries. Good on him. So who knows? It may be a moot question in the near future how much oil is left, because we may not need that much. And again, that'll obviously will affect the price. So,
well, this is the thing, because in 20 years from now, we're going to go to electric vehicles, and renewable energy, and everything is going to be away from all this pollution, to try and save the planet, if we can save it. So I think that coincides with the world not really running out of oil, but going low, going on low oil. How do you see it in 20 years from now, as we all switch to electric vehicles very soon? Who will use oil in the future? Who will be the main oil consumer in the future once all the cars on the road are electric?
Well, you lead to another area, is that will we have electric airplanes? I mean, can we power a jet? They've been playing with that for many, many years now. If we can power a jet engine with solar panels, sadly right now, the amount of solar panels required to power a jet engine is actually larger than the wingspan of a plane. So that's not quite there yet. But I think that is going to be a driving factor. Look, we're cutting down, obviously, as you just said, electric vehicles. That's cutting down a lot of the oil consumption. We're getting away from plastics. We're all doing our part, thanks to people like Sky News and whatnot, to get away from plastics, which is obviously a derivative of oil. And that leaves there obviously quite a few areas that require oil, including the airline industry. So, I mean, my own personal house, I've got a solar powered water heater, so I don't use electricity for the water, especially in summer. We do a lot more barbecuing, so we're using propane, which is, I know, is a derivative of the oil production. So I'm not using electricity there. I mean, we're all doing our part as we can. We may expand our solar capacity in the house to drive other things, and I think people will be doing it. It was funny, a few years ago around where I live, there popped up tons and tons of solar panel companies, because there were rumors about electricity prices and taxes and whatnot, and they all sadly went away. They're just simply not here anymore. So I think that was a bit of a bubble that's going to come back. I think we're going to be finding a lot more, not just in cars and airplanes, but a lot more reliance on solar power. And many economies are going to wind turbines. You see it all over the place. They're just building more and more wind turbines to generate electricity. Again, I think that,
to
Holy Grail. The Holy Grail is the jet airliner that can be run on anything but oil. Let's see.
Yeah, but instead of doing that, I'd rather use all the solar panels to mine Bitcoin and Dogecoin, like some very wealthy people on Earth taught us. Right, last question, and then I'll let you go. We are, what are we, 4 hours away from the Fed interest rate decision. For today, dollar, up or down?
I think it's going to stay the same. I don't think they're going to be doing anything. Everything I read, I mean, the only thing that we could see is during the press conference is if there's any hints on an interest rate decision before 2023 or 2024. My gut feeling is that during the statements at 2 o'clock their time, 8 o'clock my time, and not much is going to happen. But I think during the press conference, we're going to see some activity.
Yeah, there's definitely going to be some volatility. We had a packed economic calendar today. We had a lot of data being released. There we go. Yeah, we saw the building permits coming out negative 3%. We had 1.681 million versus an expectation of 1.730. Export price came out all right, 2.2%. Housing starts in red. What else? Import price index, 1.1%. So the imports are working. Don't know much about the exports. Right, Canada is doing okay. A lot of green on the CPI from Canada, and wholesale sales as well. Right.
Yeah, I mean, the import price is a direct reflection of inflation on supply demands from outside of the United States. And the United States, we keep saying, is the biggest economy in the world. Well, it's also the biggest consumer in the world, and they need stuff from outside. And this is where we have the problem with the COVID still affecting production outside of the United States. So the higher import price index doesn't surprise me.
Right. Okay. Let's see what's going to happen. Right. Brad, thank you ever so much for being with us today. I'm looking forward to the next one.
Very
Always
good.
a pleasure.
Thanks.
To be here.
Thanks,
Take care.
Andrew. Take care.
Ladies
Bye-bye.
and traders, we had Brad Alexander with us, CEO at FX Large, bringing us the latest news in the industry and an amazing round of market talks. Join me again tomorrow, same time, same place, for a new round of market talks. And until then, remember to trade responsibly and may all your trades be in the money.